Welcome to Trading Lounge and the US indices for the 26th of November. And just to let you know that our server is back on, so our website will be back on today as well. So I need to do work on those websites and update things. So I will be updating them today. And during the London opening, the Forex charts and commodity charts and so on will be updated as well. So it will take us a day to update everything and sort things out. But the good news is that our website is back online. And secondly, I still need to sort out our email servers as well. So any emails that you would have sent to Trading Lounge wouldn't have come through over the last week. So don't feel that I haven't that I've neglected you in one way or another. That's not the case. I just haven't received any emails, or couldn't receive or send any emails. So we'll be working on that later today as well. So thanks for your patience. And being cool about it. Nobody's complained, and I really appreciate that. I never complained about the guys running the server as well. They're under attack, and they need support rather than abuse. So everybody's been fantastic. So just wanted to say thank you for that. Okay, down to business. So the S&P 500 here. As you may know, I've had this as 1 and 2 and 3 and 4, and we're looking for wave 5 up here. I did have a possible wave 5 top here, but as Radek pointed out, that can't be the case because the lot of US stocks are still in this wave 4 and haven't made new highs here, and we'll look at some of those today. But also too, when we look at the things like the DAX here, you can see that it hasn't made a new high above this, let's just say expanded flat at this point. So it hasn't made a high above that. So we still need to push up higher in these regards. So I'm fairly confident that we're looking at 1 and 2 and 3 and 4 and 5. The wave 2 in here has given me a little bit of a grief, and we've got a few little options to talk about that. But I think the Nazi's got the best lead to the upside, so we'll have a look at that as well. And let's just go in here. So, when I look at this as wave 1 here and wave 2 here, it's a bit, so that would be a little A wave, B wave and C wave here for wave 2. That would sort of be in line with the Nasdaq actually. Because then we've got this up here as wave 1 and back for wave 2, and that would be the same. That would be there in the Nasdaq as well. In terms of, we'll have a quick. I mean, that's on the daily chart. This is on the 1 hour chart. But we had that straight wave 2 coming down, then wave 1 and wave 2 here, and we've been working to the upside. We'll look at that in a moment. But that fits this scenario. So if I go into the 4 hour chart here, so. An A and a B and a C. I know it's not a very good C wave here, but it does fit because I did count it on the intraday as a little 1 and 2 in here, and the wave 4 does overlap a little bit, but this is clearly 3 waves here. So the only other way that we could actually get down to the 61.8% mark here is look at this as wave 1 here and wave 2 over here. So this top here when it comes in, just saying, this top here when it comes in over here, because I'm counting 1, 2, 3, 4, 5 in here, and we'll pull that apart so we can have a look at that. So that top there could be a B wave, and we come down for a C wave. So there's a bit of a trap. Just there's just before we leave the party, there's just one more little trap that we have to kind of consider. I don't think it's the case, but I do need to point it out. This wave 1 and wave 2 here, it's also a little bit iffy as well, because wave 1 is this length and time and breadth and all the rest of it, where this wave 2 is bigger. So is it possible to have wave 2 over here? Yeah, possibly, and that would, but it still leave us with this wave 1 here. The reason I've done this for is because yes, I can fit it in just, but mainly it fits in with the Nasdaq, as I mentioned, because it's very difficult to count this down here in 5 waves on the Nasdaq. If I can bring the Nasdaq across back on the 1 hour again, it's hard to count it from that high down to here as 5 wave structure here. It's much better suited as an A wave, a B wave, and 1 and 2 and 3 and 4 and 5 here for the C wave. And even that's a little bit dodgy because we've got the wave 4 overlapping this here. But I know that when you're working with whole numbers, you will see the wave count skewed and pushed around and bent. And after a while, when you get a little bit of experience, you kind of start to accommodate that a bit. But also, once again, as well, if this is wave 1 here, this could also be an A wave down here, and then an A and a B and a C wave up here, and then crash from this point. So we'll look at this as 1 and 2. Let's just finish this off here, shall we, while we're here? We're just shooting the breeze anyway, just trying to pull a picture together and then resolve it at that point. So I'm looking for a move up. And then we can look for an ABC. You can have a look for your 61.8% and all the rest of it. We'll better do that now, actually. Just it'll just be a little bit helpful, that's all. So we'll just take it from there roughly. I'll just take it to the 200. It may be above or below that because it works out really. My point here is that it works out really quite well because we could stay bullish in the markets as long as the 12,000 here doesn't become the retested resistance in that way. We'll just leave the, if you're going for this journey, we'll just leave the stop well out of the way. So what we don't want to see, we can see the market being able to spike down like that and go to the 61.8%. But once we've got that low in here, then we don't want to see it being breached below that, okay? Because that's where the stop should be at that point. If you can work that in if you can work that in real time there, that would be good. Yeah, it's quite clear that we've got 1, 2, 3 here and coming back for 4 and going up for 5. But we'll have a look at that on the S&P. But it's just good to know that 12,000, we really want that to really become the foundation in this trend structure to the upside now. So yeah, okay, just to recap here a little bit, we're looking for 5 waves up into this space. We'll go to the 1 hour now, I think, for this. So I mean, if you've got opinions about all of this, you know, in different structures, well, I can certainly understand that because this is a tricky little guy, this one here. So we just really need to be, you know, we just need to be on guard with this. But as wave 1 here and wave 2 here, in line with the Nasdaq, then looking at this as wave 1 here with an A and a B and a C wave. Now on the cash market, it would end right here for that. At this market, we can put it at this low here. This would be 1 and 2 here and 3 here and 4 here and going up for 5, then an ABC pattern here. So I would imagine too that, let's just say that we do push up here for a moment. I mean, I think I've got this right because I'm taking it from this low here, you know, because that is the low on the futures here. So but that I understand that looks impulsive to the downside at this point. If I bring this pattern across just on the, this is on the tick chart here, and this is just 100 ticks here, so looking at it slightly differently, but there's still the same count as 1 and 2 here, and then 3 here and 4 here. Currently we have, let me just get this on here, from this low, just working this a little bit. So we've got our 38.2% retracement level there, but, so that's where it sort of should come down to. That said, this little move up here is not really displaying impulse qualities here. It looks corrective here for this. But yesterday, as you know, we counted all this up here. So this is 5 waves from that low to that high there. And then we've got this as wave 1. Or we could have this, if this is some sort of, this is one of the issues with this, is that all of this low here, I mean, you can see that I've taken the low and worked it from that point. But all of this, I don't know, could be counted differently here. But even if this was at this point here, 5 waves up to that point there, then I would sort of only panic if the 61.8% of this got removed at this point. So we can look at this low here somewhere. So in this case, we don't really want to see the 3600 become the retested resistance at this point. Okay, so that's just something to look out for at this point. So that's somewhere we can leave our stops. I mean, we've got our stops down here at the moment. But yeah, so that's that really. Just probably will make a new low. Probably will make a new low on this here, but we'll just give it a bit of space and a bit of time. So we've got the 12,000 on the Nasdaq, and we've got the 3,600 on this market here. So we can expect another low in here, I'd say, based on that little pattern there. But we'll just see how this all plays out. You know. So let's just talk about a bit of strategy at the moment for this. So let's just go to the 15-minute chart. Let's just assume for a moment that I'm right. Let's just say we've got 1 and 2 here and 3 here and 4 here. It looks like we're going to make a new low into this space here, but we'll just see how that plays out. Let's just say that we have this move down here, and then we have this move up through here to make a new high here. Then that will give us 5 waves, okay, from that point. If we get 5 waves from that point, that can first of all be wave B, which I'll just dull out, and that can be the top of the correction. I mean, we need to acknowledge that. But then if that's not the case, if that's wave B there, we're going to be coming down here somewhere. We're going to be taking that low out, okay? If this is 5 waves producing up here, and then we just get an ABC back to the 50-60% level here, 36 here, and then we start to move up from there, well, then that becomes your safe trade here. This should be, you should be able to see at least, you know, that second high there that you can go long from at that point. So just be careful about that, about this move here, because it will just be a wave 5, and then it will drop after that, and then just allow it to do that. If you can see that this is 3 waves here quite clearly, because what I normally find is that if we get 3 waves to the 61.8%, then we know it's corrective. If you get 5 waves to the 61.8%, then you know that it's bearish at that point, and then there'll be a rally, and then we'll come down again. So understanding between 3 waves and 5 waves to the 50-60% retracement level is important. And then secondly, if it is 3 waves down, then the move up through here, if you can count the first 5 waves up and then the pullback, then you can use that as that top there as your entry point, and you can even refine that on top of it. It's B wave as well, and work that to the upside. So keep an eye on the Nasdaq, and keep an eye on this. But let's just have a look at a few stocks while we're here as well. I really want to have a look at Google, if I can find it, because this was, even though it's got a different count than the other guys, it was kind of my little shining light, really sort of leading the way to the upside. So just to rehash it a little bit, we looked at this as a corrective wave here, and then because we've got a nice clear 5 wave structure here for this, you know, I could label it wave 1, and then I picked it up and started sharing it with you guys. We looked for the ABC here at that. Then I looked for wave 1 up here, jumped a bit higher than I thought. But anyway, we still had to go long on that or above that, but still you don't get into over here, so a real problem. And then I could count 1 and 2 here, and I could count 5 waves in this structure. I won't go into that at the moment. So then we're looking for an ABC for wave 4. So that seems to have played out quite nicely now, doesn't it? So we can just talk about this a little bit here. I could look at this as wave 1 here, by the way, and wave 2 here. That's cool, but that that's not here nor there at the moment. So first of all, what we do here is we normally we put that reference point up there to go long, because at that point, if that's breach, when I know that we're wrong, then we can bring it down to the B wave high here. But if you've got a keen eye, you can actually see that we're getting 5 waves in that little structure there. So we've got 1 and 2, a nice third wave here and a fourth wave here. I'm not sure how much is in that fifth wave, but if the extension's in the third wave, then wave 1 and wave 5 will be roughly the same. So I can't draw on this because it's a tick chart. I can't draw on this side of the price with my lines, but we've got 5 waves up there. So I'll just copy that for a moment, put wave 1 there. So we're going to get an ABC for wave 2 coming back. So when that drops back down here, then that's going to leave, I'll just copy that and put that there. Squash that up a bit. I can't push that past the price either. But once that tops in and it moves back down, then you can go long at that top. So you can cruise in from these, because it's hit 18. I just call it, any 8 that I see it as a profit-taking number. So it's certainly been hit at that point. So it's pulled back roughly to the 38.2%. So that's all good. So what we should see here is 1, 2, 3, 4, 5. So we can see that this market's going to push up, and this is an A and a B and a C until that top is taken out here. That makes it an ABC at that point, because otherwise it can be down for 1, back for 2, down for 1, back for 2, and down for 1. But I don't think so, because we've got a nice clean 5 wave structure there. Let's just have a look at a couple of others. I don't know if Facebook we've been waiting for Facebook. See, Facebook's got 5 waves up there as well on that last little leg, but we want Facebook to sit on the 280 there. Okay, we'll just have a quick look at this. So that looks like an impulse wave. So we want to see, this is a 1 hour chart. So we want to see something like this here. And then we can move that over to there, and if that second high is breached, then you can go long from there, because this is a bit of a dodgy count, this one here, so let me just find something else. Apple's much the same. Oops, daisy. Apple, here we go. Yeah, this is looking quite good, really, because we're looking for an A wave, a B wave, and a C wave for wave 4. And then we've got our wave 1, an A wave and a B wave, and probably a C wave down here, because it's pulled back deep enough here. So we want to see that climb up a little bit. So we do want to see 5 waves in here. 1 and 2 and 3 and 4 and 1, 2, 3, 4, 5. A little bit dodgy. What else away can we get around this? Well, we've got our levels. If I can't work out the count, I always go to our levels. So we've got we've got 10 here. So it'd be 10, 20. They're the minor levels here, and then we can go into the sub levels, which will be 1, 2, and 3, the Fibonacci numbers, then 5, and then 8 here. So gaining support on 5 here, you could probably, that just doesn't look quite right here, because we could look at that as 1, 2, 3, 4, 5 for 1 here and 2 here. Oh, maybe that's all tucked in there. This looks like we're 1 wave's too short here. Certainly, if we get on 18, you could probably get a position here if that high was taken out, okay? But the safe trade would be on 18, so a small position on 8 with a view of adding on 20, and that will take you up to the next level, 30. So once again, 1, 2, 3 in minor levels here. So that's why we're going long here, but I'll leave that with you on that one. Get my brain working a little bit. Facebook doesn't really got us there. Apple, we just looked at. Amazon. Amazon's a bit dodgy as well, but the good thing about Amazon though is that we've got a three-wave structure here, and then we can look at, well, we can also look at this as three waves as well, because the third wave here is probably a little bit small, and also this 1 and 2 and 3 and 4 and 5 here for the C wave, an impulse wave here. I'm not too sure about that. So this has been climbing here. It's climbing nice. One of the things we could do here, I mean, it's not a very clear wave structure. So when it's not clear, you need to bring in some other artillery to help with the front line, so to speak. So that's the resistance there, and we're just hitting on the 50% here. I can see that this is 1 and 2 in here, and probably 1 and 2 in here to 3 here. So we'll probably end up, we still need another move up into this space here, right? So I'll just draw that here. So we've come here, we've had the arrival, the reaction, we want the first high above the level, and then we want an ABC pattern here. So then that there creates the long trade. These are all kind of important, even if you don't trade them for the S&P, because these are the things that are driving the S&P and the NASI and whatnot. And if they're triggering in long trades, well, that's going to be helpful for you as well. So, you know, and vice versa as well. If you're, you need to have a look around and see what's happening in the world. Yeah, okay. Well, that's it. I mean, the good thing about this is that this is overlapping wave structures here. So it is corrective. So it is a bullish market. That's why we think the S&P will also push higher at that point. Okay, I'll leave it at that. Thanks for tuning in. Cheers.